Shares of toy maker Hasbro rising after topping analyst expectations in its latest quarterly report. It did, however, in its 2025 revenue forecast come in below expectations as Hasbro included the impact of tariffs on imports from China and potential levies on Mexico and Canada. For more on this, I'm sending it on over to our very own Brian Sozzi, who has Hasbro CEO Chris Cocks on deck. Soz?
All right, thanks so much, Brad. Yeah, Chris, always great to get some time with you here. Stock ripping, one of the hottest tickers on the Yahoo Finance platform. Some of the folks I talked to this morning, Chris, saying they've given you high remarks for cutting costs. Like, how much in costs have you cut out of this business the past 2 years, and how much more is left?
Gosh, I think we're over $600 million of costs taken out of the business. Probably about 2/3 of that is via our supply chain, and then the balance is from just general overhead and admin savings.
Can you get to, what else do you have to do to get to that 1 billion mark? I think you put that out today as part of your longer-term plan.
Yeah, we still have some general admin and overhead that we can save. So that's what we pay for vendors. That's kind of like the overall kind of overhead associated with the company. Supply chain will be a big contributor for us as well. We're doing a lot for design to value to take costs out of our products, but still maintain really good quality. And then there's this whole thing that's called gross to net, which is basically the difference between our gross revenue and our net revenue. And that has to do with how much discounting allowances we put into place and other kind of trade allowances that we put into place, generally to account for overbuilding a product. So the better we get at forecasting and the better we get with supply chain management, the less we'll have to put in there. And, you know, when you look at supply chain, gross to net, and kind of like our general kind of like overall spending, that really kind of forms the lion's share of how we get to $1 billion of cost savings by 2027, which was the revised target we just talked about today.
Chris, I'm inspired by everything in your background. I think those are all toys that I would purchase maybe at some point soon, but I do realize I'm not the norm. Why are toy sales in the US still under pressure? What's going on here?
Well, Brian, I actually would say you're increasingly becoming the norm.
It's because I'm getting old, right?
Yeah. The fastest growing segment in both video games as well as toys are people over the age of 13. You know, the biggest segment now in video games is actually consumers 35 plus. So high-end collectibles, things from your childhood, that's a big, powerful motivator for the toy industry, has been for the last couple of years, and I think will be for several more. Unfortunately, Hasbro has its better than its fair share of volume from that. 60% of our sales are from 13 plus. Now, there is a little bit of pressure in some other areas of the toy category. A lot of that just has to do with the toy volumes normalizing after the pandemic. You know, the toy category has been down kind of like low single digits per year for the last 3 years. We see that starting to flatten out and basically being flat for the next 2 to 3 years. You know, we think Hasbro will benefit. We've got a great innovation portfolio coming out. We have strength in that quote unquote kidult segment. And we have a very diversified business. It's not just toys, it's also licensing, which is a business that's up 60% for us over the last 2 years, as well as games with some huge franchises like Monopoly and Magic the Gathering.
Chris, how much of a headache are tariffs to a business like Hasbro?
Well, it's certainly one that we'd like to minimize. You know, the toy industry in general thrives on sub $10 and sub $20 price points. A company like Hasbro has been working very hard to take costs out of our mix and push more value into the channel. And, you know, like when you think about the typical American family, you know, probably 95% of American families have a Hasbro product inside of their toy chest or inside of their game chest at the home. You know, our hope is that we're able to get through this phase of tariff negotiations, find a good conclusion that allows us to keep prices low and bring smiles to kids' faces at price points that are as low as possible.
Is the reality, though, Chris, that this coming holiday season will simply be more expensive?
I think a lot depends on how the whole tariff scenario plays out. When we look at like the current kind of like guidance that we've given, which factors in the 10% on Chinese tariffs, pricing will be a variable that we play with, but I think it will be very targeted. So, you know, in general, our focus is to bring more value and more products at sub $10 and sub $20.
Can you manufacture toys profitably in the United States?
We do. So a lot of our Magic the Gathering business, which is by far our biggest brand, it's over $1 billion and drives a heck of a lot of our bottom line health. It's made in North Carolina and Texas. We manufacture board games in Massachusetts. So certainly we can do it. I think the challenge with manufacturing a lot of toys like action figures and kind of like higher turnover toys is it tends to be, those toys tend to be very manual to create. And they also tend to have a fair amount of turnover because like about 50, 60% of SKUs in the toy industry change each year. It's a fast fashion category. So I think bringing back manufacturing jobs to the US would require us to do very heavy automation, and it would be a pretty heavy lift and take multiple years.
Fair point. Lastly, Chris, too, it's not lost to me that you have another partnership with rival Mattel. I remember you announced something similar with some other brands more than a year ago. Is the reality that given the cost environment, tariffs, cost of labor, you name it, that your two companies are going to have to work together?
Well, I think the reality for Hasbro is we already work with Mattel, we already work with Lego, we work with Spin Master, we work with all of the major toy manufacturers. And I think that's an advantage we have. We see partnerships as an opportunity to extend our brands, to bring more value to new consumers, and to make some money in the process. As I said, our licensing business is up 60%, and that's a very high margin business for us. So I see that as a power trend moving forward and something that's just net goodness, whether it's Play-Doh plus Barbie, like we just announced today, Transformers and Hot Wheels, D&D plus Lego, or supersized board games like we do with Spin Master.
No chance in hell I'll be able to make one of those Play-Doh Barbies. I'm just going to say it there. I wanted to get that out publicly. Chris, looking forward to seeing you around the toy fair. Chris Cocks, Hasbro CEO. Good to see you.
Thanks so much.